Welcome to Richie Shot. This week is all about market movers and unexpected developments. Fasten your seatbelts and let's dive in. Climate crisis supercharged record Nordic heat wave, scientists say. A prolonged heat wave swept across Scandinavia this July, turning one of the world's coolest regions into an unexpected hotspot. Norway, Sweden, and Finland all experienced exceptional heat, with Finland enduring 22 straight days above 30 degrees Celsius, and Sweden logging 10 consecutive tropical nights where temperatures stayed above 20 degrees Celsius. Researchers told The Guardian that global warming caused by fossil fuel emissions amplified the event, making it at least 10 times more likely and around 2 degrees Celsius hotter than it would have been in pre-industrial times. Some climate models even suggested that such an extreme episode would not have been possible without human-driven heating. The heat strained public health systems as hospitals became overcrowded and overheated, forcing cancellations of scheduled surgeries. Warmer waters in lakes and seas triggered harmful algal blooms, while an uptick in swimming activity led to at least 60 drownings. Hundreds of wildfires burned across forests, and people fainted during summer festivals and gatherings. Wildlife also faced severe stress. On the Scandinavian peninsula, reindeer perished in the heat, and others sought refuge in shaded urban areas or road tunnels. The last major heat wave in the region in 2018 was linked to 750 premature deaths in Sweden alone. Scientists expect a similar toll once the latest figures are compiled. This Nordic heat wave is part of a broader global pattern, with extreme temperatures recently hitting the UK, Spain, Croatia, the US, Japan, and South Korea. Experts warn that such events are becoming more frequent and severe, underscoring that no country is shielded from the impacts of climate change. JP Morgan brings forward Fed rate cut forecast amid labor weakness and Trump nomination uncertainty. JP Morgan has brought forward its projection for U.S. interest rate cuts, now anticipating a 25 basis point reduction in September rather than December. The shift reflects a softer labor market and political turbulence following President Donald Trump's latest pick for the Federal Reserve Board. The bank now expects 3 additional quarter-point cuts after September before the Fed pauses. Michael Ferroli, the bank's chief U.S. economist, said Fed Chair Jerome Powell may weigh broader risk factors at the upcoming meeting, beyond the standard balance between inflation and employment targets. Trump has nominated Stephen Miran, who currently chairs the Council of Economic Advisers, to fill a temporary vacancy left by outgoing Governor Adriana Kugler. The White House is seeking a permanent appointee when the 14-year term begins February 1, and is also considering candidates to replace Powell when his term ends in May 2026. JP Morgan noted that Miran's confirmation before the September 16th and 17th policy meeting is uncertain, but his presence could deepen divisions within the Fed's decision-making body. Trump has repeatedly called for lower interest rates, and a Miran appointment could offer a more direct avenue for influence. Bank of America analysts warned of possible dissent within the committee if rate cuts are not delivered, citing Miran's critical stance toward the central bank. The size of the September move could depend on August jobs data. JP Morgan suggested that an unemployment rate of 4.4% or higher might justify a larger cut, while a lower figure could prompt resistance from inflation-focused members. Separately, the bank named Governor Christopher Waller as the leading contender to succeed Powell, a choice Barclays believes could reassure financial markets. CME's FedWatch tool shows traders now pricing in an 89.2% probability of a September cut, up sharply from 37.7% just a week earlier. Trump plans new tariffs on steel and semiconductor imports, signals gradual rollout. According to Reuters, U.S. President Donald Trump said Friday he will introduce tariffs on imported steel and semiconductor chips in the coming weeks, using a phased approach aimed at boosting domestic production. Speaking to reporters aboard Air Force One en route to a meeting with Russian President Vladimir Putin in Alaska, Trump explained that the initial tariff rates would be relatively low before increasing sharply over time. Trump voiced confidence that companies would choose U.S.-based manufacturing rather than face steep import duties. The announcement is part of his broader trade agenda, which has already shaken global commerce through sweeping tariff hikes on a wide range of goods and targeted industries such as automotive. Earlier this year, Trump raised tariffs on steel and aluminum to 25%, later announcing in May that the rate would double to 50% to strengthen domestic producers. It remains unclear whether the forthcoming measures will add to those increases. On semiconductors, Trump last week floated a 100% tariff on imports but offered exemptions for companies committing to expand U.S. chip production. The semiconductor sector, vital to technology and defense, has become a focal point in global supply chain competition. If enacted, the new tariffs could heighten trade tensions and force significant shifts in sourcing strategies for two critical industries. Buffett's Berkshire buys stake in United Health, trims Apple, and Bank of America holdings. Billionaire investor Warren Buffett's conglomerate Berkshire Hathaway disclosed that it acquired shares in U.S. health insurance giant United Health Group during the second quarter, while scaling back its positions in Apple and Bank of America. In a filing with the U.S. Securities and Exchange Commission, Berkshire reported owning 5.04 million United Health shares, worth roughly $1.6 billion as of June 30th. News of the investment sent United Health stock soaring by as much as 9.6%. The purchase came at a challenging time for the insurer, which, along with other U.S. health insurance companies, has been grappling with unexpected increases in medical costs. In April, United Health missed Wall Street profit forecasts for the first time in over a decade, triggering a decline in its share price. Since then, the company has replaced its CEO and announced plans to change its chief financial officer. Berkshire also revealed that it exited its $1 billion stake in U.S. telecom carrier T-Mobile during the same period. On the selling side, Buffett continued to trim Berkshire's holdings in Apple and Bank of America. The company sold 26 million Berkshire of A shares in the quarter, reducing its stake to about 8% by the end of June. Last year, Berkshire had already offloaded 20 million Apple shares, though Apple remains its largest single holding by market value, despite a $9.2 billion decline in the position during the 3 months ended June 30th. Buffett's latest portfolio moves highlight a strategic rebalancing, entering the health insurance sector while moderating exposure to two of its most high-profile equity positions. SEC extends review of Solana ETF applications to mid-October. The U.S. Securities and Exchange Commission has postponed its verdict on CBOE BZX Exchange's plans to list Solana exchange-traded funds proposed by Bitwise and 21 Shares. Invoking its maximum extension period, the regulator set October 16th as the final date for approval or rejection. Two other filings from Canary Funds and Marinade Finance were delayed under the same procedure. The SEC's Trading and Markets Division said additional time is needed to evaluate the rule changes under BZX regulations for commodity-backed ETFs. The move underscores the agency's deliberate approach toward expanding crypto investment products beyond Bitcoin and Ether.